So before that panel interview, let's hear what Leigh Riley had to say.
Off the bat, I'd say no. But I think it's quite an open-ended question in a sense that, are you already invested? What are you invested in? Is this money that you can afford to lose? Is it more of a speculative view? I think those are all questions that would need to be answered before you would decide to go and throw your bonus at an investable product or an investable instrument like this.
So realize that it's a bit of a gamble. You can do it if you can afford to.
Absolutely.
The same as if you would go to Monte Casino.
Well, yes. I mean, you know, hindsight is a perfect science. And through history, retail traders or retail investors have gotten in at the top of most cycles prior to a crash or a retraction or a pullback. And this can be in gold, in diamonds, in property, in whichever investment you want to look at in history. So there is a propensity for the man on the street or for the person standing around a barbecue or a braai to take whatever is coming out of the mouth of their peers and apply it without doing any of the legwork, without doing any of the investigation into what they're doing. Because most of us tend to be inherently lazy when it comes to making those kinds of decisions. So when you look at something like Bitcoin, it is a speculative view. It has no intrinsic underlying value. You are taking a view that, given the fact that it's done 700% this year, or 670 or 680, depending on where we are now, whether it's up 30% or down 20%, whether it's got the legs to do more than that in a given year. And no other asset is appreciated as much as that this year. So
everyone talks about the fact that maybe if you had $1 when it began, you're looking at close to $1 million. I don't know. It's so out of this world, the gains. But like you say, maybe that run has already happened and everybody climbs in at the end, but we'll never know.
We'll never know. Naspers was expensive at 850 Rand. And we're in a scenario now where...
So you still would have made
you still would have made heaps of money given the fact that you would invest it then. If you want to look at another stock locally, Capitec, when it was at R1.75, the amount of investors that you might come across and chat to and say, they had the opportunity to get in, and now near enough 1,000 Rand, they would never have expected it to get there. Sure, the rises haven't been as meteoric as Bitcoin, but you've also got to ask yourself, what are you buying into? Are you just doing it as a Hail Mary? Is it something that you, like you said, or is it just similar to going to Monte Casino and you're placing a bet on red or black? If that's the case, then you've got to understand that that's the risk you're taking. I wouldn't be doing that with my entire life savings. I think if you have spare money, or if you have money that isn't invested and you are invested already and you've taken care of things that you need to take care of, and you don't have children's school fees that you need to pay for, or your monthly rent or anything along those lines, then yes, maybe it's worth a speculative look, but know the risk that you're going to be taking on.
You can confirm, I hope, that some investors are taking this really seriously, though.
Absolutely. Absolutely. And again, I think it comes back...
What sort of transactions scope are you seeing? So,
to put it on a relative basis, it depends on, number one, it depends on your view, whether you're an investor or whether you're a trader. Now, at IG, we're a trading firm and we trade in derivatives. So we might have somebody who is already invested in Bitcoin or Ethereum, which we offer, who might be wanting to hedge their bets. So they might use an existing platform where they hold the currency or the physical commodity. And with us, what they'll do is they'll trade the derivative of that product to benefit from the volatility in the price swings on a leveraged basis.
All right.
So it really does depend on what kind of view you're taking when it comes to what you want to do with the currency or with the commodity. And how it is regulated and how it will be implemented is very different on a geographical basis, because in some areas people are looking at the blockchain technology and how it will be used going forward, and how new cryptocurrencies are a little bit more dynamic. They're a little bit more maneuverable, slightly more high-tech. Bitcoin's already almost 9 years old already. So if you look at something like Ethereum, it allows you to potentially track, or the blockchain within Ethereum allows you to potentially track pharmaceuticals, donations, anything to do with welfare where you have to make contributions. Because it's an online ledger, it allows you to instantly settle that information. So even for perhaps an exchange like the JSE or for Straight, that could be used as opposed to keeping a register of shareholders.
Yeah, this is the underlying technology. It has a whole lot of uses. But if we say with Bitcoin, and you've raised another one, which I'm very pleased about, because if this can just be created in different forms, scarcity enables value. What if there's just a flood of currencies? Bitcoin, there was meant to be a stop on when we stopped creating Bitcoins, but now there's smaller denominations. How do you keep value if currencies can just be created willy-nilly?
Implementation. So if a cryptocurrency or the technology that forms the basis to it is accepted on a broad base, which it has been to a large extent now, largely through people living online or people transacting online, and more than likely through some form of regulation, maybe not of the currency or the commodity or of the product itself, but certainly of those who are offering it.